Imagine this. You earn a salary and ideally you spend less than you earn. Simple, right? But the moment you borrow, you are spending tomorrow's income today. And that only works if the lender trusts you will pay it back. Now think bigger. What if the borrower isn't a person but a government? One that can borrow almost without limit and often on its own terms. Welcome to Globalheadwinds.com, your go-to channel for geopolitics and geoeconomics. And today, let's talk about the world's biggest borrower, the United States. The US government has an enormous appetite for spending, from its military to healthcare, and much of it is financed by debt. By the end of 2024, America's national debt reached $35.46 trillion, roughly 123% of its GDP. In other words, the country owes more than it produces in an entire year. And servicing this mountain of debt is staggering. In 2025 alone, the US will pay $1.124 trillion just in interest. That's more than the GDP of countries like Switzerland, Saudi Arabia, or Argentina. Economists are worried. If the world's largest economy ever defaulted, the shockwaves could spark a global financial crisis. Japan may have a higher debt to GDP ratio, but it is the sheer scale of the US economy that makes its debt so dangerous. Now, who lends America this money? About two-thirds of the debt is held domestically by pension funds, banks, and insurance companies. But nearly a third comes from abroad, countries like Japan, China, and the UK. That's where things get tricky. Debt also means dependence. And in late 2024, Japan, China, and the UK together sold off nearly $80 billion in US Treasury securities. If that trend continues, it could rattle markets, spike inflation, and weaken America's global standing. But here's where the story takes another turn. It's not just the government drowning in debt, it is the American people too. As of 2024, US household debts stood at $17.57 trillion. The average American owes about 112% of their income, meaning households are on average deeper in debt than what they earn in a year. So on one side, the government is borrowing heavily. On the other, the citizens are trapped in a cycle of loans and repayments. Both are spending more than they can save. That leaves little cushion for shocks, whether it's wars, recessions, or financial crisis. The country and its citizens both are at the mercy of interest rates. And interest rates are deeply intertwined with inflation. As a thumb rule, higher the inflation, higher is the interest rate to counter it. So in case of inflation going up, Americans will be hit hard twice. First, the prices of the commodities and services will go up, and then to access those goods and services at high cost, they will be forced to borrow money at higher rates. We have seen what happens when the system cracks. The 2008 Lehman Brothers collapse exposed the fragility of American financial habits. Yet, years after later, the pattern remains. High spending, low savings, and ever-rising debt. The bottom line, America's debt problem isn't just about Washington. It's woven into the entire fabric of the economy. And when both the government and households are stretched this thin, the risks are too big to ignore.
As the trade war over tariffs persists, so does the fear of a possible recession. The Federal Reserve Bank of New York reports that the total household debt is now more than $18 trillion. KXA and Sally Hernandez talked to an expert about many people are struggling with unimaginable debt.
What exactly is unmanageable debt? I mean, that you use that term when it comes to talking about this kind of debt that people have.
Yeah, unmanageable debt is debt that is affecting your ability to pay for basic life necessities, is one definition. So if you have debts that are preventing you or causing you to make a choice between buying groceries or paying your bill, your credit card bill, for example, or making your auto loan payment or putting gas in the car, paying rent or the credit card bill, that's definitely unmanageable debt. The other kind of definition that we hear from people is that unmanageable debt is debt that they're making those payments on time, but they're the minimum payments. And as a result, their debts are continuing to grow. So they kind of spiral into greater and greater debt and create other financial problems for them. So it's a debt that's controlling. Unmanageable debt is debt that's controlling you. Manageable debt is debt that you are controlling the debt.
Are we talking about debt from credit cards or medical bills? What kind of debt are you seeing out there?
It's all of the above. There are people that have what I think of as too much car. I've been in that situation when I was young. I bought the coolest car. Not cool for my bank account, but survived that. But so auto debt, medical debt can affect you, and that's something quite often we don't control, and so that's a really frustrating one. And then credit card debt is by far the most common. That's what we hear from people all the time. It's more than $1 trillion in credit card debt among American consumers, and reducing credit card debt typically is the fastest way to overcome that unmanageable debt load.
Stay with Globalheadwinds.com as we track these vulnerabilities in the world's largest economy. Because when America stumbles, the world feels the tremors.